Assalamualaikum and a very good day to everyone. Today I'm going to discuss questions on receivables, and our question today is going to focus on accounting for trade receivables and note receivable. This is question 4, which is on PP Berhad, the reporting entity. So you have the transaction of PP Berhad here. On 5th of February, sales were made to Berhad. So let's look at what are the other transactions as well. So this is actually a credit sales made to Let us look at the journal entry. Before that, let me just inform you that this company is actually operating in year 2018. So this is actually 5th of February 2018. So sales were made on credit. So this will give rise to accounts receivable. So therefore, if you can see here at the bottom, what I put here next to this, right? You would see that there should be one journal entry that you will have to record for that receivable. What is that? That would be for you to debit the account receivable. Put the name of the customer. Account receivable here is account receivable. Berhad, and credit the sales. Credit sales here is credit the sales revenue. So what is the narration is not required, but I'm just putting this to make things easier for you. So I put that the narration that is to recognize actually a financial asset as a result of the trade receivable, which is give rise to the trade receivable due to the credit sales. Next, transaction on 19th of April. Here you accepted, we're talking about PP Berhad, they accepted the notes receivable 60 days. 60 days is the term of the note, right? So term of the note is 60 days. And then the percentage here, 12% is the interest percentage, 23,000 is the face value. So for the balance that were overdue, so meaning that for the sales that were taken place somewhere on 5th of February, now they are issuing a stronger promise, which is a notes receivable. So that is for you to record on the date you accepted the note, right? So on the date that you accepted the note, earlier you recall, if you can recall, earlier there was trade receivable, but because of this notes, the trade receivable will have to be credited now, and it has a stronger claim, so it will be debited. What is debited? The notes receivable from and how much? It will be at the face value, which is also the same as per the receivable that you have recorded earlier. So that was to recognize the note receivable that was used as a settlement for account receivable. But still you need to collect from the payment due. But this is just giving a stronger claim. Okay, that was for the second one. The third one, 20th of April, a customer, YY Berhad, which is another customer, paid 800 in respect of the debt that was earlier written off as bad debt. So this customer was maybe bought the goods from the company earlier on, but now you have already declared before this as a bad customer, so you write off. But suddenly on 20th of April, the customer paid 800 in respect of the amount that was earlier written off as bad debt. And this is actually bad debts recovered or recovery of bad debt. And if you can still recall the bad debts recovered, there are two entries. One is for you to reinstate the account receivable with the debt that were being recovered, which is to debit account receivable of YY because the customer is YY, and credit allowance of for impairment of trade receivable 800. And this was actually the reverse of the journal entry to write off the bad debt. So this is to record the recovery. And the second journal entry is for you to record the payment that you receive. To record the payment that you receive, just debit the bank or cash account and credit the accounts receivable. So if you receive, let's say 800 out of the total that you earlier written off as bad, So therefore, you will still put here 800. However, let's say you write off as bad was 800, right? And when they decided to pay you, they just want to pay you maybe around 600. So the amount that you will record here is not 600. It's not 800, sorry, it will be 600. If let's say they decide to pay only 600 out of the 800. Same goes here. The payment that you receive should also be the amount that you receive in cash or in check from the trade receivable YY. But in this case, it's the same as you earlier written off as bad. Next one is on 14th of May. You accepted a 10%, which is the interest, 90 day, the term of the note, 18,000, which is the face value, bill of exchange. Bill of exchange is another name for notes receivable, or sometimes called bill receivable. Sometimes it is also called promissory notes. And this is from a company, your customer, TS Berhad. And TS is actually asking for extension of credit period for its overdue account. So earlier they purchased from you on credit, and now they decided that maybe the company have decided they cannot pay. So TS now issue a notes to you, to TS, that is a notes payable. But to us, we are PP Berhad, right? So that is a notes receivable. So that is asking for extension of credit period, but it has a stronger claim now because it's a stronger promise by way of having a bill of exchange. So let's record that on 14th of May. So you need to record that first. So to record that earlier, if you can still recall, right, it was the case of TS Berhad. So TS Berhad, you will debit the notes receivable and you will credit the account receivable. So that is 18,000. And how much is that 18,000? That 18,000 is relating to the face value. And if you read here, you would notice that TS account was already overdue. So it has happened maybe before the current year, maybe the previous year, yeah, because not enough information. So we assume that was already being recorded before this as your credit sales, and now they issue a stronger claim, which is a notes receivable. So that is at the face value. Next is 18th of June, collected payment from Berhad. So if you can see, I put the purple color here, which is to relate to So I use different color for different customer, right? And if you can see, YY is in turquoise, the TS is in green, and is in purple. And you would see CC is where I use blue, right? So collected payment for from Remember, the notes was accepted and you recognize the note on 19th of April. So on 18th of June, that was a 60-day note. So if you calculate the maturity date, it will be on 18th of June. But here it has been calculated for you. So you can also work it out and calculate when is the maturity date. It should be on 18th of June. So on 18th of June, what you will do is you are going to record the payment that you receive from the customer. And our customer here is Okay, what you will record is that the payment should be at the maturity value. So the maturity value, right, which is the face value of the note or the principal value plus the interest. So the first thing to do, if you want to do the schedule, it will be fine, but also you can also straight away do like this. First is to calculate what is the interest revenue, because when they pay, they are going to pay us together with the interest. So it's not just the face value, but it will be added with the interest. To calculate the interest, you need to take the face value, 23,000, times the percentage interest rate, times 60, which is the term of the note, and divided by 360. So you have 460. So you take 460 plus the face value, you will be able to get the maturity value. And it's the amount that you have to collect from the customer, even though they owe you only 23,000. But because you have given them credit extension more than what they have been given earlier, so that means you need to calculate the to go and take the interest, although interest, is not forbidden in Islam, right? Okay, next, we go on to our next transaction. Our next transaction is 13th of August, where you have this customer that earlier you received the notes, which is TS. TS note was dishonored, meaning that TS did not honor the promise that the company earlier made. And however, even though it was dishonored, PP still expect to receive payment, meaning that there is still hope in the future that you'll be able to go and recover the payment from TS Berhad. So you need to go and record the dishonor situation here. You are going to look at how do we record the dishonored notes. Right, let us look at the dishonored notes that happened when? On 13th of August. So on 13th of August, right, we are relating to TS. When the customer dishonored the notes, now what you need to do is you are going to now convert the situation or the status of the customer. Before this, you have credited the account receivable, right? Now you're going to go and debit back the account receivable because the notes has been dishonored. No payment was received from the customer. How much? So this is already on the due date if you check, because this is 90 days note. So from 14th of May up till 13th of August, that was 90 days. So on the due date or the maturity date, still no payment is being received. So it means that the note is being dishonored from the maker. Remember, the maker is the party that issued the notes to us, TS. So debit account receivable 18,450, right? 18,450. And you are going to credit note receivable 18,000, which is the value of the notes or at the face value. And the interest revenue would be 450,000. So the interest revenue of 450, not 450,000. 450 is, you can calculate by taking the face value times the percentage times the term of the note over 360. And the account receivable will have to record the maturity value because of the notes being dishonored. And it has already reached the maturity date. So that is why we record at the maturity value. Yep. So it was 18,450. So where the customer failed to pay the amount due on the maturity date, but still you expect to receive payment. Right, that's why you don't go and write off as bad, because there are still hope to get that. On 31st of December, an amount owed by another customer, CC, was written off as bad debt due to their bankruptcy. So this was just to write off as bad. So to write off as bad debt, what you need to do is you're going to have your allowance account being debited. And for your information, the company already have done the, making the estimation of those customers that will likely to go bad. And they have already maintained the customers, the allowance for impairment. So debit allowance for impairment, 5,000. Credit account receivable, CC Berhad, 5,000. So that is to write off the account receivable CC as bad. So it's advisable that you write the name of the debtor so that you won't be confused who are your customer, right? So the last transaction is to record if there is a decrease or increase in the allowance for impairment. Okay, to do that, let us look at this information given here. All of the above transactions have to be recorded. Yes, we have not recorded earlier, but now we have. As at 1st of January 2018, you are given the balances in the allowance for impairment. So the one in the shocking pink here is the allowance for impairment balance of 18,500 is a credit balance. And there is also a trade receivable balance of 427,550 at the beginning of the year, before taking into consideration all these transaction here. So this is the beginning balance. And the company closed its account on 31st of December. That was the reporting date of the company. And now we are on 31st of December 2018 to close the account. The aging analysis of the receivable has also some estimation being made for the so-called expected credit loss. So these are the detail given. These are the number of days past due, yeah, where you are given the amount outstanding and what are the expected loss rate for each of the amount outstanding according and classified according to the number of days past due. Right, where the percentage given is different. They do not have one single percentage for all total receivable, but this percentage is based on the expected loss rate. And CC Berhad, which is the one that you have written off as bad, 5,000, right, was also included in the group of accounts that were under overdue. So this 84,500 also included 5,000. So you need to go and take out that 5,000 from 84,500, write off as bad, and go and update the amount outstanding here. If you can just calculate, that will be 79,500 for here, right? So we're going to check that later. What are you required to do? We have already done the journal entry. Now you're asked to also prepare the ledger accounts. And what we still miss is one journal entry, which is the journal entry related to increase or decrease in allowance. Don't forget that, because at the end of the day, you want to know how much is the allowance for impairment charge in the SOPL. Either there is an increase in the allowance or decrease of the allowance. So B was the ledger, so we'll be doing that for 2 ledgers. And the C is to justify whether you can de-recognize or not these 3 customers. And D is for advice that you need to make to your directors on the amount of allowance of trade receivable and also the accounts receivable to be disclosed in the financial statements. So when you say financial statements, means that what to be shown in the statement of profit or loss, what to be disclosed in the statement of financial position, because trade receivable is actually a current asset, right? Okay, having said that, let's start by doing our table first, this table, where we are going to go and find out what is our expected credit loss allowance at the end of the current year. So here you are given the percentage. I copy paste that here. So what for each percentage given, go and have one extra column like what I did here and create that column, then go and calculate what is the expected credit loss. That is step 1. You calculate the expected credit loss for each past due days. So you can see that one line here, one row that I put 79,500. Remember earlier the question told you that earlier it was 84,500, right? But because there was a bad debts from CC that we have already written off, this has to be updated to be 79,500. So we have taken out the bad debts of 5,000 from CC here. So therefore what you show here is after the bad debt being excluded from the amount outstanding. So after you have done that, for the first 3 rows, you will get the percentage being multiplied with the amount outstanding, 1,005, right? And this is amount outstanding in the accounts receivable, 3%, so that will be 3,855, 5%, 3,250, and 15%, you shouldn't go and multiply with 84,500. You must go and multiply or times with 79,500, which is after you take away your bad debts that you have written off, right? So 11,925. Then you get 2530. Okay, what is this? 2530 will be the one that you need to take note that will be your last, if you prepare your statement of allowance, that was actually your expected credit loss in your allowance for impairment. So let's look at the ledger. Yeah, I will show you first the ledger relating to our what was it? our accounts receivable, our allowance for impairment. You have this given at the beginning of the year for you, yeah, which is the balance. And our closing balance was this, given from our calculation. This is our closing balance, 2530. So that 2530 is actually the closing balance, credit balance, right? 2530. That is obtained from the calculation of your expected credit loss. So what you need to do is, this is asked for you to record, so you can just go and post all the entries. So we have to post all the entries, so I've done that. So this one is related to YY, recovery of bad debt. So you can check later the journal and see why I posted it here. Another one is on the bad debts being written off, which is CC, right? So that is the transaction. So therefore, what you need to understand is that you need to go and check what are the changes in these balances, meaning that from 14,300 to 2530, right? What caused the changes? There was an increase. Why increase? Because the balance here was 14,300, and when you go and calculate your expected credit loss here, this one, right? This one, 2530, expected credit loss for this year, 2530. You can see that there was an increase from the running balance 14,300 to 2530. And that increase, sorry, oopsie daisy. Okay. That increase is what you are going to go and debit, because this is an increase. Where to your statement of profit or loss as charged for the year. So this is 6230 in terms of debit credit, allowance for receivable. So this is the one that you will have to debit. Yeah, and this is due to the fact that 14,300 was before that, but at the end of the year, your estimation for the expected credit loss is 2530, right? So therefore, that 620 will have to be recorded in your journal as well. Okay, that is one way of doing. Or what you can do is by doing the workings like what I did here. So this is actually an increase. Okay. Okay, that was an increase. Okay, that increase is debited to the SOPL 6230. So you are done with the journal. And this one is the account receivable. That you should be able to do that as well. This is just something similar to just your earlier accounting study. So you just need to go and post everything here. I just show it here for you. And when you post it here, make sure that whatever that you did journalize, you have posted here correctly. So these are all the things that you should have posted. And at the end, you would see that there was a bad debt's been written off, right, for CC. So 5,000. So 5,000 was excluded, right? So if you have the chance, you can total up this as well, this part. And you get 423, right? And that 423 should be the same as here, 423, because we have taken out the 79,500. So just look at the figure here. I put a different color for you. Okay, maybe some other colors, right? Yellow maybe. Oh, yellow cannot be seen from far. Okay, I'll just take this blue. Yep. And with this blue. Okay, it should be the same, but we have already taken out the bad debt. So done with this. Now is for you, that was the journal, right? And the requirement C is for the derecognition for you to justify. But before we do that, I'm going to finish off with the part on E first, which is on the part of how to advise. This one is on the part on E. So let us look at this part that you normally do, which is How do you advise your directors on how should you disclose the movement? This is answer E. Okay, answer E. So the company should disclose the movement of allowance and you need to prepare the statement. So when you prepare the statement of allowance, I've done this for you to save the time. First, put the balance at the beginning. So that should be the same as here, 18,500. Okay, meaning that just the one that you have here. Bad debts written off was 5,000. This was from CC. This is the entry here, 5,000. Bad debts recovered, the 800, yeah, from here. And remember, bad debts was recovered from a different customer. It was written off from another customer. And at the end, this 6230 should be put here. You add the charge for the year. Yeah, or alternatively, let's say you don't prepare you are not required to prepare the accounts, yeah, the 3-column ledger, let's say. You just are going to use the statement. If you use the statement, my suggestion is that first add up the last 3 figures here, or whatever amount, before you have finalized your charge for the year, which is 18,500 based on whatever transaction that relates to allowance for impairment. This is normally what you will come across. So you will see that if you total up these 3 items here, you get 14,300. Without doing this 3-column ledger, this is the balance. You will compare with this balance, compare this with this, and you can see that there was an increase because earlier it was 14,300 and now it was 25,30. The increase is 6230. So that was the charge for the year, which is increase in loss allowance for impairment of trade receivable that you will have to charge where to? In your statement of profit or loss. So this is the one that you will show in your statement of profit or loss. Okay, that is what you show in the statement of profit or loss, just to give a better idea. Okay, done. Next, these are the movement, and this is the last part, which is to give the advice also about the amount to be shown in the statement of profit or loss, which is on that 6230. The increase should be recognized as expenses in the statement of profit or loss. You can also show the statement, but here I don't show the statement. And lastly is on the net realizable value of PP, right? Net realizable value of PP. I just open up this for you. And that was going to be account receivable 423, which is the figure here. Figure here coming from your trade receivable balance 423. Next is to deduct with the allowance for impairment. So deduct with the allowance for impairment. That was 2530 from here, yeah, which is from the statement that you prepared, and therefore net realizable value is 402,470. And you need to write this statement as well. The one in green is what you should write as an advice. I put that in green. The account receivable is to be shown at net realizable value of 402,470, which refers to this, the figure that you have here. Yeah, that is the green figure here, sorry, right? And 2530 is the one that you should get from your percentage of expected credit loss allowance. And this 6230 is the one that you get from the difference, or from the difference that you get through your comparison of the running balances with the expected credit loss balance in your allowance for impairment statement at the end of the year. Okay, 6230. Okay, and then we move to the last one. It will be very fast what is done, which is the theory part, which is to advise should you recognize or not. Okay, let's look at the criteria first. Should you de-recognize or should you not? So Mfrs 9 prescribe that you can only de-recognize if the contractual rights to the cash flow has expired. So there are 3 companies that involve here. Let's look at what should we should still recognize or we do not de-recognize. All right. So this customer TS, we shouldn't de-recognize because the contractual right to the cash flow. I'm not going to state the amount. You can just delete this. Okay. You can put yourself later the amount. Contractual right to the cash flow from TS has not expired as TS Berhad still failed to pay the amount owing. Remember, it was dishonored. Therefore, PP should not de-recognize TS from its book. Right, for TS. That was the requirement of the question C. And last one is, in contrast, contractual right to the cash flow from MM and CC Berhad has expired. Remember, MM has fully paid. I put this here. I'll zoom for you. Okay, it has expired. And MM has fully paid the amount on 18th of June. Yeah, that was the reason that you will not recognize anymore or you will de-recognize. Whereas CC, you have written off as bad and they were declared, the company was declared bankrupt on the 13th of August. So when it was declared bankrupt on 13th of August, right? Hence, therefore, PP should de-recognize both MM Berhad and CC from its book. So that's how you answer it. Thank you for watching. I'll just give you a quick view of everything here so that you can see things better, maybe, right? So these are the part that is required for you to give as an advice. Yeah, these are the advice for the de-recognition. Yeah, relate to Mfrs 9. These are the three-column ledger, and these are your journal. With that, thank you for watching. I'll see you when I will see you. If you have any question, just write down in the comments. You want to give feedback, you can write down the comment or whatever feedback in the comment section. I'll see you when I will see you. Keep on practicing because practice will not make perfect sometimes, but somehow it will reduce your mistakes. With that, I thank you. I'll see you when I will see you. Assalamu alaikum wa rahmatullahi wa barakatuh.